NVIDIA stock is currently trading at $188.79 per share, marking a significant intraday rise of 3.08% as of midday trading on January 15, 2026. This movement is part of a broader recovery that has seen the stock battle back from recent volatility, with the price hitting a daily high of $189.18 while maintaining a strong floor at $186.36. Trading volume is surging today, already crossing the 88 million mark, which indicates high conviction buying from institutional players who are clearly positioning themselves ahead of the February earnings cycle. While the surface-level price action looks like a standard tech rally, the reality underneath is far more complex and arguably more bullish than the consensus suggests. Most investors are looking at the current 3% jump as a simple reaction to positive sentiment out of CES 2026, but the real story is a quiet tectonic shift in the supply chain. While the market was distracted by headlines of geopolitical friction, institutional data shows a massive accumulation of shares by funds that aren't just betting on the next quarter, they are front-running the official launch of the Rubin architecture. The expectation among the general public is that NVIDIA has peaked and will now see a cooling period as competitors catch up. The reality is that NVIDIA is effectively killing its own mid-tier Blackwell products, like the 5070 Ti, to redirect silicon toward high-margin AI data center chips. This isn't a sign of weakness or supply failure, it is a calculated, aggressive move to squeeze every cent of profit out of their limited wafer allocations. You might hear talking heads on cable news saying that the AI build-out is slowing down, but if you look at the raw data from Fidelity or Interactive Brokers, you will see that the sophisticated money is doing the opposite of what the smart friend at the water cooler is telling you. The expectation is a plateau. The reality is an intentional pivot to higher density compute. This move forces every enterprise that missed the Blackwell window to scramble for Rubin slots, creating a massive backlog that extends well into 2027. This scarcity is a feature, not a bug, and it ensures that NVIDIA maintains its legendary gross margins, which currently sit above 70% when you strip out one-time charges. Looking at the immediate trading patterns, we are seeing NVIDIA stock outperform its peers like Apple stock and Tesla stock today, primarily because the semiconductor sector is benefiting from a flight to quality. As macroeconomic uncertainty lingers, investors are using online investing tools and investing sites to move capital into names with the most visible earnings growth. While the broader market might be concerned about interest rate directions, NVIDIA's balance sheet is so robust, with over $60 billion in cash and short-term investments, that it's essentially its own ecosystem. For those using a SoFi robo-advisor or Schwab Intelligent Portfolios, NVIDIA is likely a top holding because it provides that core growth exposure. But for those doing online investment through a Fidelity mobile app or the Robinhood app, the real opportunity lies in understanding the Rubin cycle. We are currently in the transition period. Blackwell is the current king, but Rubin is the heir apparent. The 2026 outlook involves a 40% upside according to consensus targets, with some analysts seeing a path to a $7 trillion valuation. That sounds like a fantasy until you realize that NVIDIA is effectively lowering the cost of intelligence by a factor of 10. When the cost of a product drops by 90%, the demand for it usually explodes. The risks are there, of course. Geopolitical tensions in the semiconductor supply chain, particularly with Nexperia and the Dutch and Chinese split, have added 6 to 8 weeks to lead times for some discrete components. But if those disruptions bleed into the high-end GPU manufacturing, it could create a temporary bottleneck. But NVIDIA has the best in-class supply chain management in the world. They've moved to a yearly release cadence, which keeps their competitors in a permanent state of playing catch-up. In summary, today's $188.79 price point isn't just a random fluctuation, it's a reflection of the market beginning to price in a future where AI isn't an experiment but a baseline requirement for every corporation on the planet. The gap between what people expect, a cooling tech sector, and the reality of a massive multi-year infrastructure build-out is where the alpha is found. NVIDIA has transformed from a gaming company into the central bank of compute. Whether you are using Fidelity Investments, Interactive Brokers, or Robinhood Investments, the data is clear. The underlying momentum is supported by a fundamental shift in how the world produces value. We've seen the expectations of a peak repeatedly shattered by the reality of NVIDIA's execution. From the 10-for-1 stock split in 2024 to the Rubin launch in 2026, the company has proven that it can scale at a rate that defies traditional financial modeling. As we move toward the February 25th earnings report, expect the volatility to continue, but keep your eyes on the institutional accumulation. That is where the truth is hidden. The smart friend might be telling you to sell and lock in profits, but the biggest funds in the world are still clicking buy on their Fidelity Brokerage and Interactive Brokers platform accounts. They aren't looking at the next week, they are looking at the next decade. Always remember that in this market, depth is your greatest asset. Don't be swayed by the surface-level noise of daily percentage changes. Look at the gross margins, look at the architectural transition, and look at the token costs. That is the real scorecard. NVIDIA remains the most pivotal company in the modern economy, and as long as they continue to widen their moat through extreme co-design and vertical integration, the reality of their growth is likely to continue to outpace the cautious expectations of the crowd.